Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and today I'm going to talk about the Nifty as a whole. So I have changed a lot of things with respect to this channel, with respect to what I'll present. So we'll give you a brief later on, but today I'm going to discuss about Nifty. And just to tell you, in a couple of lines, I'll discuss about Nifty and a couple of stocks that I believe from the Nifty that are going to perform well over the next 3 to 6 months. Again, disclaimers do apply. And on the weekend, I'm going to talk about the small cap index and a couple of stocks in that. Plus, I'll bring you a stock which is less than 50,000 crore market cap, uh, preferably a small cap that could perform well. So that will be there, and plus a learning video will come every week. I'll try to do that on Sundays. That will come as well. So was busy just finalizing as to what could be the content from here on in on my channel, so that it can bring you a better, you can say, understanding of the market and better understanding of what is happening in the market and in the global, you can say, economic environment. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of NSE and BSE, and that I am not a official portfolio advisor. Whatever stocks or companies that I discuss, whatever discussions I have on the financial markets and matters of finance is purely on my experience over the last 11-12 years. So whatever decisions you take with respect to you can say putting in money into any stock or equity markets, etc., kindly do that with analysis, with your own analysis, and after talking to your official financial advisor. So before I talk about the Nifty and those stocks, here's small request. Kindly support me on Patreon to get better, you can say, leverage with respect to what I do in the market, my portfolio, sectors that I'm looking at. You can have interaction on messages. You can send me and queries any time of the day, and I'll surely reply on that, and it will help me make better videos and look into more, you can say, detail into the markets and make better video with the financial aid that you would all provide me with. So now let me just take you to the money control website, and let's just discuss about the Nifty as a whole. It's falling again today, and it seems like that the trend of FIIs have reversed. That doesn't mean that we cannot make money in the market. We can do that, and that's why I keep churning my portfolio now and then, and there is money to be made. So we'll discuss about that in a bit. But currently the market is around 19,350 as we see at the moment, and there has been a decline of more than 600 points from the top. That's more than 3%, which I would call just a decline, not even a correction. So a correction is probably around 5 to 7% in any market, and you can say a deep decline or a deep correction is between 12 to 15%, and then above 20% we go into bear market territory. So the decline has been 3%. So where are we headed from here? So if you can look at the charts here, if I take out the 6 months chart on the Nifty, then we'll have a better understanding as to what is going on. If we look at a candlestick chart on a 6 months basis, we'll understand that the market is precariously poised. It is poised at a point where it could break down towards 19,100 odd levels, or it could reverse from these levels. So what my understanding is that we could head towards 18,800, 18,900 over the next 1 month, over the next 3 weeks, but that is not going to be a straight decline. So what we are going to see is, if you look at the moving averages part, which we can see here. So let me take you to the simple moving averages. We have, you can say, the 50 DMA at 19,270 to 80. Exponential moving average 50 is around 19,250. So what my understanding is, we reversed from 19,250 odd levels on Friday, say a day before yesterday, that is on Monday, and I think we'll retest that. We may go lower than that. So basically, the market moves in a 300 point band. That is what I have seen over the last 4 or 5 years that has been happening. So if we say that 19,900, let's take out the 90 points away from all these things. So 19,900 as a top, then we could be looking at 19,300 as a very firm base, and that is why the market reversed from 19,250 to 70, whatever those levels were. If we break 19,300 decisively and we keep going down, then we are looking at 19,000 levels, 19,000, 19,100 levels. And I believe that it's not going to be easy for the market to go to 18,800, but around 18,800, there is immense support. So there could be a decline of 500 points from here, which is 2 to 3%, which is quite understandable with the kind of rise we have seen in the market. So if you see here, there has been a continuous move from March, end of March. The Nifty has been performing from around 17,000, 16,800, 900 levels, and it took a pause around 18,800, which was the last high of the market, and then it broke out from there. So there could be a retracement to these levels, but in my opinion, uh, this is the time to get into the market. So if you have bought at higher levels, these are the, you can say, times to hold on. If you have positions which are large stocks, which are Nifty related stocks, to hold on to your positions. I'll talk about small caps and the small cap index on the weekend in detail, because let everything happen by Friday, and then probably we'll discuss in detail, because then we'll have a clear direction as to where the small cap is headed. Although I believe they are showing more strength than what Nifty is doing. In the pockets, in some of the pockets, the strength is more. So in my opinion, the worst case scenario we are looking at is 18,800. uh, a realistic scenario is that we may reverse from 19,250 again, or we could go to 19,100, 200. So there could be a decline between, you can say, 100 point to about 120 points from these levels to around 500 points. That is maximum that I see at the moment. If things change, we'll definitely discuss that in a week's time. I don't think over the next 1 week we could see further decline than that. There could be a situation where FIIs may sell big time and will fall more, but I think there'll be buying coming in at 18,800. Why I say that is because when you look at the numbers picture, when you look at the results and everything in FY24, and I keep saying that most of the analysts do not talk about it, most of the people on YouTube, on social media, do not talk about it. The earnings for FY24 should be closer to 950 rupees, and even if I take 20 times of that, is the value comes out to be 19,000. So if we go to 18,800 at 950 rupees, will be below 20 times earnings, which would mean that will be a decent buying area. I won't say that will be extremely cheap, but will not be expensive. The market will not be expensive. So I don't think that the market is expensive at these levels, and I will not be surprised if on FY24 basis we go to 23 to 24 times earnings. 23 and a half times earnings is around 22,000, 22,300 on the index. I will not be surprised if we go beyond 21,000 on the index, closer to 22,000 on the index over the next 6 to 9 months. I think the rally should continue. What FIIs are doing at the moment is that interest rates are better in US, and there is a possibility of interest rates rising in the US, and that is why probably money is now moving out of emerging markets such as India, and probably they'll come back in a month or 2 months. It is not going to be an 18 months higher test that we had seen between October 21 to March 23. We are not going to see that at this point of time, at the moment, I think the top should be around 22,000 on the Nifty. And so this is a correction that could definitely continue. Now the stocks that I'm looking at, there are three stocks that I believe can be a safe bet. One of them is Divi's Lab, with the kind of results that the company has come out with. So let me just open up the screener website, and we can analyze in detail about say the V's lab. Then you'll have an understanding. So I have a feeling that pharma and IT. So when I discussed about the market at the first point, I thought I did talk about as to some of the sectors doing well. I think pharma and IT will continue to do well, especially mid cap IT, mid cap pharma, but large cap pharma is also performing. So if you look at Divi's Lab, uh, in the June quarter, they did 1780 crores versus 2250 crores. But if you look at the margin picture from 24% in December, the margin has gone up to 28%. So it's coming back to those earlier levels, and we are seeing that exports from pharma is beginning to pick up. So I believe that this is a better, you can say, scenario to buy into large cap pharma, because they will move first and they will move big. So if you look at the Divi's Lab, you can say move, it began in March, and it faltered a bit in May, probably of the Q, because of the Q4 results. But then there was no looking back, and we have seen the kind of move that Divi's has shown. We are seeing that there has been a crossover of 50 and 200 DMA around 3370, and the move has continued. So I will not be surprised that over the next 6 8 months it can give you decent returns. I don't want to say that this point, this sort of return, or something else. Keep relevant stop losses, but I think Divi's Lab is a decent pick in this regard. A second pick that I believe, and this is a festive play, and do not forget that this time around, so we had 2022, which was without the pandemic, but this time around it's going to be pretty big, because uh, for the last 1 year things have been open, people have been able to make money, whether in the, you can say, in their businesses, in their industries, in their office places, they are making money. And finally you can say that the festive demand should come in, although there is inflation and the inflation trajectory is up. But I believe from last year, compared to last year, things should pick up. And the stock, which is Titan, has corrected. So if you look at from here, from 3150, 3160, the stock corrected all the way to 2900, and now is again picking up. Very safe bet from the Nifty space. If you look at the numbers have not been very encouraging, and that's why the stock fell. But if you look at the move of the stock after it has fallen, we are looking at a scenario where people believe that the next 2 quarters could be pretty good for the company. So I think these are safe levels for somebody to get into something like a Titan. I think Titan should perform over the next 6 months. Again, keep relevant stop losses and disclaimers do apply. And the third pick is from the IT space. I believe that LTI Mindtree uh, should perform. These are all Nifty picks, because I have been discussing Nifty. I'll discuss about small cap picks and small cap index probably on Saturday. But the way IT is behaving, I don't think that this is going to stop, say, even in the next few weeks. I think this is going to continue throughout 2024. And if the numbers continue to be good, this should continue for the next 1 year. LTI Mindtree, again heading towards new highs, and the performance continues. If you see here, the crossover took place around 4700 levels. That's where the stock became really bullish, from 4800 or so, and that's from where the stock has reversed. So this is just the beginning of the move that has taken place. And why the move has taken place is because of this reason. So in June, what they did was their sales improved year on year. So 7600 crore became 8700 crore, and it sales improved, albeit marginally quarter on quarter. So there seems to be a bottom in place at around 83 8400 crores on a quarterly earnings. And if you look at the margins improved quarter on quarter. Year on year there was a marginal dip of 1%. So they are going to, I think, come back to 20 to 22% margin in the next 2 quarters. So the numbers are only going to improve, and that's why the stock is performing. So again, a decent move expected here. So these are the three, you can say, stocks that look really good in terms of where the industries are moving, or which industries are going to perform, as well as which are the stocks in that industry, in those industries that are performing well. So this is my analysis of the large cap index. I believe 19,000 is perhaps a decent support. Maximum 18,800 we are headed to. We are not headed in higher immediately, but over the next 6 8 months we could scale much higher levels because of the valuations that we are trading at. So this was the video on the market and indices. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. And kindly support me on Patreon. You get more, you can say, you get more access to data, more access to talking to me on Patreon. You can support me there, or you can support me on YouTube, or you can say WhatsApp if you want an yearly membership. Thank you.